Alastair Newton, co-founder and director at Alavan Business Advisory, joins us on the show right now. Alastair, hi, morning. The near 70-year-old conflict between India and Pakistan has now flared up again and again, and in the recent times, tensions remain raised. Is there need to worry since India has also been retaliating with combing exercises? Could things escalate from this juncture?
When we had the last flare-up in the autumn of last year, I did say then that I do think that there is a non-negligible risk of an escalation over the ongoing border dispute between India and Pakistan. And I do think it's something which investors need to watch very closely. Now, having said that, clearly investors have got bigger fish to fry more immediately because of concerns over North Korea in particular, although those have faded a bit. So at the moment, outside of the Indian subcontinent itself, I don't think this border dispute is getting the publicity which it should be getting in the international press, because the tensions, as you say, clearly are higher today, and there is a continuing cycle of higher and then slightly lower tensions going on. The risk is that investors will get caught out by surprise, as they were at the end of last September when we saw Indian retaliation, if things do escalate quite quickly. And I would urge investors to pay attention to this issue, because it could get more serious even than it is today.
Now, coming to France, investors are nervous again, given that there is a surge in the support for the left-wing man, Marie Le Pen. Do you think Le Pen could actually beat Macron in the second round?
It's not impossible. It's looking less likely today than perhaps 10 days ago, as the opinion polls continue to unfold, with Macron with around about a 20 percentage point lead. And let's keep in mind that the opinion polls were very, very accurate on the first round. Having said that, there is still the critical issue of potentially of abstentions. If we see wholesale abstentions, it almost certainly will play in Le Pen's favour. And she has deliberately been pitching for votes, not only from left-wing supporters of Jean-Luc Mélenchon, but also, as we saw in the speech for which she's been criticised over alleged plagiarism, of François Fillon on the right. So one can't rule it out, but where things stand today, this still looks very much like Macron's election to lose, and I think markets are right to be reasonably relaxed about the prospects, although perhaps they're a little bit more relaxed than they should be, particularly when we consider that in the event of a President Macron, he will not have a majority in the French National Assembly, elections for which are next month. So it's not clear that he's actually going to be able to deliver on a lot of the things which markets would like him to deliver on, in particular his economic reform agenda. He could, as I've said on several occasions in the past, turn out to be a French Matteo Renzi, a very bright, personable young man with very good ideas, but without the ability to deliver on them.
Right. Alastair, you've mentioned in your notes that the US strike in Syria last month marks a potentially major shift from what many had expected of Trump and should be weighed carefully. What does it imply for other regimes which are now pushing the envelope with the US?
Well, first of all, let's go back to the question of North Korea, because clearly that is top of the agenda. Despite significant concerns 2 weeks ago of a possible American military strike on North Korea, it is now clear that at least in the immediate future, Trump is going to opt for a mix of more sanctions and possible diplomacy. I published a paper on the 4th of April saying that I thought that was the most likely track. So far, so good, but clearly there are downside risks to that scenario. I do think, though, that putting North Korea to one side, Trump's big focus is going to continue to be on the Middle East. Earlier this week, he had a phone conversation with Vladimir Putin over Syria. I doubt very much that there's going to be much common ground between Russia and the US over that particular issue. And then, of course, there is the big issue, at least in the eyes of Washington, of Iran, where we have a presidential election coming up on the 19th of May.
Right.
It's not clear that President Rouhani is going to win a second term. Admittedly, the hardliners in the race have committed to stand by the Iran nuclear agreement should one of them be elected. But I think the Americans are going to continue to focus closely on Iran once North Korea has hopefully calmed down a bit.
So, Alastair, how would you summarize the geopolitical situation right now? What do India investors need to worry about?
Well, let's start from the perspective of investors. So far, this year has turned out to be rather better than many, including myself, had feared at the start of the year. If we look at the world today, the IMF, among others, has just increased its forecast for global growth. We have genuine growth in Europe today, not just ECB-fueled growth. The Dutch election turned out okay. It looks like the French election will also turn out okay. Brexit is not bitten yet. Oil prices are down, which is broadly good for the global economy. Hard commodity prices otherwise are up, which is also broadly good for the global economy. We haven't had a war started yet, and the Trump trade, which we saw in December, has thankfully faded a little bit, and US markets have got back to something a little bit more normal, even though, of course, equity markets are still at considerable record highs. So overall, not so bad. The risk inherent in that is that investors will get overly complacent over geopolitical risk and get a nasty surprise. And there are plenty of things out there which could happen. Some of them, 2016 tells us, are likely to happen, even if we consider them to be tail risks today. But having said that, so far so good. As far as Indian investors are concerned, India is, as I have said on several occasions on your channel in recent weeks in particular, a very bright star among the emerging market family. The economy is going well. We had some very good regional election results, very good for BJP and therefore for market sentiment. It's hard to see how BJP could be defeated in the upcoming election in 2019.
Exactly my point, Alastair. With the BJP government now in the lead, and, you know, Narendra Modi now in a dominant majority post the state elections, do you think the reform process will be easily implemented?
Things are never straightforward in India. As you know, he still does not have an upper house majority. He's not going to have one until after the 2019 general election at the earliest. So legislatively, things are going to continue to be tricky. But he is in quite a strong position to continue to bolster the economy through fixed asset investment. And I do think we are going to see a boost to fixed asset investment over the next couple of years through to the next general election. And that, of course, is a supply side measure which is good for the long-term performance of the economy. Also, let's keep in mind that we are finally seeing GST rolled out. And as I have been arguing since 2006, 2007, GST is for me one of the single most important measures in boosting India's economy by moving India closer to a single market. It's taken a lot longer than some of us had hoped. It's taken a lot longer actually than I had expected after Modi won the last election. But it's here today, and I think that's going to be a big boost to India's long-term prospects.
Okay, Alastair, appreciate your time. Thank you for joining us.
Find us on Facebook at facebook.com/ETNow and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/ETNow.